If you judge the American economy only by presidential sound bites, you'd think 2025 was a golden age. Donald Trump talks about record growth, the greatest economy in history, trillions in new investment, and tariffs that supposedly pay for tax cuts and $2,000 checks. His allies go on television and call the latest GDP numbers a full-out win. That proves his critics wrong. But if you judge the economy the way a billionaire investor would by the income statement of a typical family, the picture looks very different. Growth is up, yes. So are unemployment, household costs, and anxiety. Start with the statistic Trump loves most, GDP. In the third quarter of 2025, the U.S. economy grew at an annualized rate of about 4.3%, the fastest pace in 2 years and significantly stronger than most economists expected. Consumer spending surprised to the upside, especially among higher-income households, and corporate profits were buoyed by capital gains and some reshoring-related investment. A White House press release crowed that economic momentum continues to build, defying expectations at every turn. And Trump World declared that this was proof his America First tariffs and executive orders were working. On paper, that looks good. GDP is the economy's top-line revenue number. For years, Americans complained that their growth rate was stuck in the 2% range. Hitting 4.3% feels like a throwback to earlier booms, and Trump is eager to take the credit. His press team touts rising customs and tariff revenues more than $150 billion in the second term so far, and a rare monthly budget surplus this summer as evidence that he's both juicing growth and strengthening the government's balance sheet. We got trillions coming into the country, he says. We had less than $1 in 4 years. The message is simple. The experts were wrong, the doom and gloom media were wrong, and Trump's version of economics, tariffs, pressure on the Fed, emergency orders is working. But GDP is just the top line. The billionaire investor doesn't stop there, and neither does the average voter. They look at the cost line and the job line, too. On jobs, the story is much less flattering. When Trump took office for his second term in January, the unemployment rate was around 4.0%. By November, it had climbed to roughly 4.6%, a 4-year high. That might not sound like a crisis, but it represents about 982. 0 more Americans counted as unemployed than at the start of the year. Trump has tried to spin even this. On the rally stage, he jokes that if he wanted to make the unemployment rate look better, he could add 300 zero jobs with just one phone call by ordering agencies to rehire the government workers his new Department of Government Efficiency, the DOGE, has cut. He blames the higher jobless rate on those federal layoffs, implying the private sector is stronger than the headlines suggest. But the math doesn't back him up. CNN's breakdown points out that DOGE's cuts account for roughly 300 zero positions, while the number of unemployed people has risen by about 982, zero. Federal employment is only a small slice of the story. The real weakness is in private sector hiring that has stalled or slowed. The labor market is also uneven. Economists describe a K-shaped pattern. High-income households and large firms are doing relatively well, while younger workers, low-income Americans, and some minority groups are seeing deteriorating prospects. Black unemployment, for example, has edged up to above 8% for the first time in 4 years. Gen Z faces what Fortune calls a jobless growth nightmare, strong GDP headlines, but a hiring environment that looks increasingly precarious and tilted toward gig work and part-time contracts. When Trump insists the job market is much stronger than the unemployment rate suggests, fact checkers say his calculations are flawed, and that for many workers, especially those without specialized skills, it doesn't feel like a boom at all. Then there is inflation. On this front, Trump can claim some genuine progress compared with the 2022 peak, and he does loudly. Headline inflation has come down from over 9% in mid-2022 to around 2.7% annual in December 2025, the lowest reading since mid-2023 and close to, though still above, the Federal Reserve's 2% target. For central bankers, that looks like success. Price growth has slowed. Expectations are stable, and the Fed felt comfortable enough to cut interest rates by 0.25 percentage point earlier this month, while warning there is no risk-free path ahead. Trump, however, has turned this into another victory lap, claiming inflation is virtually over and that prices are way down. That's where the disconnect with voters really begins. Officially, price growth has slowed, but the level of prices, what people actually pay, is still much higher than it was before the pandemic and before Trump's second term. CNN and other outlets report that affordability remains the #1 economic complaint. Wages have risen, but not enough to fully catch up to the cumulative price hikes of the last 4 years. For a family, that means their paycheck buys less rent, less food, less gas, even if the rate of new increases is down. Tariffs are a big reason why this gap between inflation and affordability exists. Trump loves to brag that tariff revenue has jumped by more than $200 billion compared with Biden's term, and that foreign firms are finally paying their fair share. He has proposed using this stream of money to finance both tax cuts and the $2,000 checks he repeatedly promises for low-income and middle-income Americans. The problem is that tariffs behave like a sales tax imposed at the border. Importers pay them, then pass most of the cost through to consumers and businesses in the form of higher prices for cars, electronics, machinery, building materials, and even some groceries. Jerome Powell, the Fed chair Trump regularly berates, has been blunt. Trump's tariffs are a key reason inflation is still above target this year. Companies have so far absorbed around 80% of the new tariffs in their profit margins, according to J.P. Morgan estimates. But analysts expect that in 2026, they will begin passing more of those costs on to customers. In other words, the worst of the tariff-driven price effects may not have fully shown up yet. That's not how Trump describes it at rallies. In his telling, tariffs are a free lunch. Foreign countries pay, Americans gain, and any talk of higher prices is fake news. This is where the billionaire narrator lens cuts through the marketing. Imagine a company whose CEO boasts about record revenue and new fees it is charging customers while quietly letting operating costs creep up and ignoring a rising number of late payments. On a spreadsheet, that is not sustainable. The U.S. has something similar happening at the household level. Credit card balances are at record highs, and serious delinquencies, payments more than 90 days late, have climbed to their highest level in about 15 years. Auto loan stress is up, especially for subprime borrowers. Housing costs, particularly for new buyers and renters, remain painfully elevated despite some cooling in headline indices. So in 2025, America has what one analyst called a two-story economy. On the top floor, GDP, corporate profits, and tariff revenue look strong. On the ground floor, households are running harder just to stay in place. Lower inflation doesn't feel like a victory when rent is still up 20-30% from a few years ago, and the grocery bill never went back down. Trump's own pollsters admit that affordability is the word they hear again and again in focus groups. Americans aren't asking why GDP isn't higher, they're asking why their budget still doesn't work. This gap between macro strength and micro pain is already shaping politics. CNN's economic coverage notes that a majority of Americans believe the economy is in a recession or headed toward one, despite the 4.3% growth rate. Consumer sentiment measures are subdued, and Trump's approval rating on the economy, while better than on some other issues, is not at the level you'd expect for a president overseeing strong headline growth. Many voters remember the same pattern under Biden: solid data, sour mood. Trump won in 2024 by promising he understood the disconnect and would solve the affordability crisis on day one. Now, a year later, he risks repeating the same mistake, celebrating statistics while dismissing lived experience. The unemployment story is particularly dangerous for that narrative. Trump has a long, tortured relationship with the unemployment rate, as CNN put it. In his first term, he bragged constantly when it fell. In his second term, as it rises, he downplays it, calls the numbers fake, or blames government job cuts that only account for a fraction of the increase. He even told supporters he could bring the rate down to 0.5% by rehiring some government workers, a claim that would require hiring about 3.5 million federal employees, more than the total historical peak of federal employment. Fact-checkers point out that this is not just unrealistic, it fundamentally misunderstands what unemployment measures. For voters, the details don't matter as much as the feeling. The job market is getting tougher. Young people struggle to land stable, well-paid positions. Workers in sectors hit by tariffs, like manufacturing and agriculture, face uncertainty about orders and exports. People who lose their jobs find that the new ones often pay less, are part-T time, or lack benefits. Against that backdrop, Trump's boasts about GDP growth and tariff revenue can sound tone-deaf, especially when he also brushes off questions about food prices by saying groceries are way down. PolitiFact and others have rated those claims misleading at best, noting that many staple categories remain higher than when he took office, even if some have stopped rising. This tension between the story Trump tells and the reality people feel is what makes Trump's economy versus reality such a potent theme going into 2026. It is not a simple good economy ungrateful voters situation. It is a structurally imbalanced recovery. Top-line numbers recover, asset prices and profits do well. But the bottom half of the income distribution continues to struggle with debt, rent, health care, and child care costs. When Trump says, "Let me explain the real economy," he means tariff revenue and factory announcements. When voters talk about the real economy, they mean whether they can afford to move, start a family, pay off cards, and save. Even some conservative economists worry that Trump is focusing on the wrong scoreboard. A Mercatus Center brief and other analyses highlight that while GDP and headline inflation are fine, the combination of higher tariffs, policy volatility, weaker job creation, and rising delinquencies creates a fragile foundation, especially if a global shock hits in 2026. Powell's warning that there is no risk-free path after the latest rate cut underlines that the Fed is trying to thread a needle between supporting growth and not reigniting inflation, which tariff escalations could easily do. Yet Trump often frames the central bank as an obstacle, calling Powell too late and demanding deeper cuts, which could further spook bond markets already nervous about deficits and trade wars. For a billionaire narrator, the conclusion is straightforward. On one side of the ledger, you have 4.3% GDP growth, 2.7% inflation, and hundreds of billions in new tariff revenue, the numbers Trump loves to repeat. On the other side, you have rising unemployment, a K-shaped job market, record household debt stress, and an affordability crisis that stubbornly refuses to fade just because a chart says 2.7%. Politically, the second side is the one that votes. If Trump keeps selling the first and dismissing the second, he risks walking into the same trap that cost Biden so much support, underestimating how angry people get when leaders tell them their pain doesn't exist. The scoreboard for 2025 then looks like this. The macroeconomy is not collapsing. In some ways, it's impressively resilient. But the lived economy, the one that shows up in bank accounts, at gas stations, and at the end of the month when the credit card bill arrives, feels far from great again. In that gap between charts and checkout counters, the 2026 midterms are already being written.